Hey everyone. Hey Leigh.
Hi.
Leigh with Rapid Mortgage. So she's agreed to come on today and talk to us a little bit about jumbo. So there's a lot of questions, or at least I'm getting a lot of questions. And I know that, you've got the answers. So we've got you here to help us out. But there are people, Chase just stopped all jumbo loans, right? Something
Yes.
like the last couple days. And
And
it's
Wells Fargo, a bunch of the big banks.
yeah. So, so how does that play into this whole coronavirus thing? And how do you see that coming down the pipeline for Charlotte? Like, are there ways around it, in other words?
So, first of all, jumbo loan is any loan that's over the loan amount 510,400. Okay, so anything over that is considered to be a jumbo loan, not necessarily purchase price, but your loan amount. So that also gets confusing because sometimes there's if you're putting, say you have a $600,000 house, but you're putting down 80,000, that puts you in the conforming range limit, right? So
Okay.
jumbo loans are typically, the reason that people have suspended them is one, because it's just a lot of money. Like, Chase, the big banks, like if you're doing an $800,000 loan, you could do one of those, or you can do two $400,000 loans for the bank. So that's one thing. Two, there's more houses under jumbo range, so that also it increases the risk. And plus, when people are making less money, less people can afford the higher price ranges, so that makes it become more risky as well. So there's a lot of reasons for them to do it, but that they've temporarily suspended. Not saying that it's going to come back. Some small banks are still doing it. A lot of local banks are still doing it, which is always good to reach out and try to figure that out if there are people that are doing it in your market. And if you want to reach out to me, I can help you, guide you in the correct direction. But there are there are a couple alternatives to doing a jumbo loan. So, and that's one of the things that Samantha wanted me to talk about today, is what you it's okay, what you call a piggyback loan.
Yeah.
So a piggyback loan would be doing part of the loan amount for the 510,400. So doing that would be the main part of your loan, right?
Okay.
And then you could put usually it's 10% down. So you could put 10% down and avoid and get into that jumbo range by doing a second mortgage that makes up the difference between that 510 and what your down payment is. So if you
add those together, right, and then you take it from I guess, do they use the appraised value for that?
Yeah, it's the same. The purchase price works the same way. So it's whatever you're buying the house for and what it appraises for is what they'll lend you on. So,
Got it.
just for simple math, let's say you're buying a $700,000 house.
Mm-hmm.
You would put $100,000 down. You would do a home equity line, which is that second, for $100,000, and then your conforming limit would be $500,000. So that gets you're still loaning technically 600,000, which is above the conforming range, but you're breaking it up so into two loans, so it's not one loan over 510,000. So that works for a lot of people. The downsides to it are that it is two loans and there's two payments, but it also is, in most of the time, equity lines. Right now, they're going to be really cheap because the Fed rate is cheap, right? So they're going to be really cheap to be able to get. However, a lot of them are interest only. So when you're paying that extra month, that payment, you're paying your normal mortgage, and then you're only paying interest on the home equity line. So you're never actually paying off the principal balance unless you're paying more than what the minimum payment is. So a lot of people get it confused in that. Plus, it's adjustable rate, and all of them are not fixed rate. So that's the downside. But the good news is it is good for someone who, say, like, gets bonuses or has a lot of commission income, because you can pay that home equity line off and then you still have it. So you can use it essentially like a credit card, but it's cheap money. So say a lot of people use that instead of a credit card. So say you have that $100,000 equity line, right? You pay you pay $20,000 of it off. You can use that $20,000 again whenever you need it, if you need it, and then your payment just adjusts, right? So you have instant equity.
That sounds like another great topic too, because I get a lot of clients asking me about like HELOCs and bridge loans and things, and I think you.
Yeah. So there's good things and bad things about it. That might be a good option if you're looking at a local lender whose the rate's not great on the jumbo, which it's probably not because it's riskier right now. So that's a good option for people, and we can help you structure that or figure that out or how that would work for you.
Perfect. That's really great to know, because I know, like I said, I've had a lot of people contacting me and asking me questions about it in the last couple of days, and kind of sends a panic when all of the big banks say, hey, we're stopping all jumbo loans, and like you said, temporarily. Do you have a crystal ball? Do you know what really mean, especially in this market? Like,
if it's coming back, if the jumbo.
Yeah, like temporarily, do you foresee that kind of running? In my mind, I'm like, okay, so whenever they open the market back up, whenever everything gets back to normal, which in my head right now is May 1st.
Yeah.
Like at what point
Don't tell you. Today you can't handle it being later than that. Yeah.
No, I really can't. But yeah, so I don't know. I guess it's
I think it'll probably be a year before normal jumbo if everything goes perfectly. I think it would be a year before jumbo lending comes back at big banks. Another thing to note is that a lot of people saw in the news this week that Chase is only taking doing loans now for over 700 credit scores and putting 20% down. That was a big headline. Just so you know, that is not the case with everybody. Like, we are not doing that. We still have your traditional FHA products with 3.5% down.
So as of today, mortgage is still lending. You don't have to have a 700 credit score. You can do all of the things still.
No, right now we are doing down to 640 right now. We've been closing out below 640 this month, but yeah, we are doing 640 is our lowest rate. We're still doing 100% financing on VA. Still doing your conventional 3% down if you qualify for that program, or conventional 5% down. So we're in USDA 100% financing. We're still doing it 640. That was always the case, but we're still doing it 640 too. Conventional manufactured houses, if you know anybody who wants a conventional manufactured house, we're doing that too. So there are people still doing stuff in the market. Just because the big banks are saying, and that's the headlines you're seeing, don't get scared off of buying if you don't have that 20% down. There's still options for you in the marketplace right now.
Perfect. Okay, awesome. Well, speaking of the market right now, I kind of wanted to cover a couple things and just see what you're seeing. So you're still seeing closings, right? You've still got buyers coming in the pipeline coming to buy, and they're still out there, right?
Have 2 closings tomorrow, so
awesome.
Everything's still happening.
So it seems
a lot of attorneys are doing like the drive-through closings, so they're coming out to the parking lot and signing. So, and like we're typically like a realtor and a lender might come to your closing. We're not allowed to right now, so it's making everything a little bit easier.
I know it is, but it's kind of sad. I didn't get
the
last 2 closings, and I'm like, geez, 8 years I've not missed a closing, like for a reason like this, but to be told like, hey, you can't come, pretty terrible.
Right.
But the market is surprisingly, like, if I looked at South Charlotte and Fort Mill, like I kind of dove into those numbers a bit, and everything for the most part is either on par with last year, like, same-ish number of same-ish number of solds, and sales price per square foot, those look about the same. I didn't look at specific price brackets, just kind of looked in the general region, but everything is right on par. The biggest change that I did notice was the number of under contracts is up almost 20% for Fort Mill, which is crazy because people think like, oh my goodness. And this, by the way, this is March. I'm looking year over year from March 2020 to March 2019. Like, what did it look like last year this time? What did it look like, this year? And it's up 20%. Number of homes under contract. So when people look and they say, oh my goodness, no one's buying right now, everyone's scared because the coronavirus has us all in this pandemic panic. We have stay-at-home orders, we're not allowed to leave certain markets, we're not allowed to show homes. But in Mexico County, which I know where you are, we can't actually show a home at all, period, unless it's under contract. So then it becomes essential, right? So the North Carolina Association of Realtors has come out with a new form that allows us to get it under contract, to get it in, get the paperwork going. So sorry. I have a 3-year-old and he needs all the things. Bear, please close the door for a second. Okay. So at any rate, so that helps us do our job better. So the governor, Rory Cooper, has deemed us essential workers. However, we have to be under contract in order for it to be essential. And for you, I know a lot of times that lenders are saying, I've heard you, the sooner you can get the rate lock, the better, right? And all you need is what, a property address, right?
Yes.
Get a property address, you can lock in that rate, and then now we are, bonded by this document.
Right.
We can actually take it to the market and we can say, okay, now we can show the house, we can do inspections, you can do all of those things. So everything can be kind of business as usual. There's just a couple of new hurdles to get through. So with under contract being up, I will say that the under contract is up and the number of active listings is down. And again, because Mecklenburg County is under, the stay-at-home orders, it's down almost 44%. So inventory is super low.
Do you think it's because people don't want to put their house on the market? And
yes, unfortunately, I think that sellers are scared to get it listed right now. They don't want people coming through their home for their own safety reasons. Most of the homes that I've shown, like I've had buyers looking, even yesterday, I went and did a virtual tour for a buyer of mine that lives in Pennsylvania. But, and it's South Carolina, the rules are a little different. But all of the homes that we've been seeing, they're either vacant or staged. One of them in particular, actually, I thought was really funny yesterday. The listing agent, I spoke to him yesterday. I showed it, or I was looking over the weekend. But at any rate, he said they moved out specifically for the coronavirus. They wanted to sell their house, but they didn't want to show it during this pandemic. So they moved in with family and just kind of abandoned ship so that it.
And that's nice because the houses people can go into, the vacant ones or whatever. Like I had a client the other day who she put in, bless her heart, she's on she's been looking for like a year and a half casually, right? But she sold her place and wants to find like her perfect place, right? So she's looking for very specific things. So she has put in a lot of offers, but had this a home coming soon. It was vacant. She went to see it. That night had 10 offers on it.
Yeah. Isn't that nuts?
Yeah. So the places that are being able to be seen, people can still.
Mm-hmm. And the good ones, the ones that are worth buying, like you said, like she really wanted it. There's 10 offers on it because there aren't very many. 44% down inventory from last March. That's obscene. And last March, there wasn't an abundance of inventory. It was low then. But 44% less than that so at any rate, the moral of the story is, people are still out there looking to buy. So if sellers could get, overcome this fear, this worry about showing, and even for us realtors, when we do, because now virtual showings has really been the way. So I'll show you, I take my phone and I put it on this little clipboard thing so I can go through and I just record the house as I'm in there. And then, or I've FaceTimed my clients. I've done both. But then I've sent them the video. We've talked about the home and they're in your home. It's the same as being in there. Hey, Sam, open the closet and let me see, where that leads to, or, what does that space look like? And they can actually see it. So at any rate, the pandemic doesn't have to be the end all be all. We can overcome this. People are still lending. You're still getting loans. It's not all doom and gloom. You don't have to have a perfect credit score to get a small loan amount, there's a lot in between. You just have to, I feel like everyone has to reach outside of their bubble just a little bit right now with everything as it is.
Right.
Yeah, what do you think?
Agreed.
Yeah. Okay.
Yep.
Well, thank you for giving us more information.
Yeah.
Helping me kind of piece that puzzle together because, like I said, it's been really confusing for a few of my clients, and hopefully, they've got information. I will actually tag you in well. where it posts. And so they've got your contact information. They can reach out and say, hey, you know, what was that you were talking about again with the piggyback or the bank or whatever? How does it work? And how can I get one?
Perfect. Yeah. Happy to help.
Yeah. Awesome. Well, thank you so much, Leigh. I appreciate
Yeah.
it.
Awesome. Stay well, everybody.
Yeah. Everyone take care. All right. Bye.